Today, we are diving into big news. Bank of Canada cut interest rates by 0.25 today, and we will talk about how will this change your monthly mortgage payments. Sounds really small, right? But for homeowners and buyers in Toronto, this is a big deal. In this video, we will go over what this rate cut actually means for your monthly payments and how it could reshape Toronto housing market in the next months ahead. We will also talk about how this new return to office policies from big employers and Ontario public sector are reshaping the demand for condos, houses, and rentals. So let's break it down. What's the story here? For the past year, Bank of Canada has been juggling the two problems, cooling the inflation while avoiding an economic slowdown. After signs that inflation is easing and with pressure building on households carrying huge mortgage balances, Bank of Canada cut its overnight rate by a quarter point today. Now, that overnight rate is basically the foundation for prime rate, which means your variable rate mortgage, home equity line of credit, or even some business loans will adjust almost immediately. What about fixed rates? Well, those depend more on the bond market, so they don't always move as fast, but they often trend in the same direction. So, all right, let's make this very real. Here's a quick example using current Toronto home prices. Let's say we have a typical Toronto home around, let's say, $980,000, and at 20% down, your mortgage is roughly $785, and after today's cut, your monthly payment is $42.20 roughly, and you're saving about $110 per month or $113 per year. In the next example, if you're buying a home a little over $1 million, let's say 1.06 and 20% down, your mortgage is roughly $850, and now with the interest rate cut, your monthly payments is $45.70 and you're saving about $120 per month or $1,400 per year. It's really not a life-changing money, but let's really be honest, in a city where every dollar counts, that's contributing to your monthly grocery or part of your car insurance, or even a little bit of the breathing room. Fixed rate borrowers won't really feel the change right away. If you are locked in at 4.6, nothing changes for now, but new fixed rate products might dip slightly, maybe by a tenth of percent if the bond yields keep sliding. So, what does this mean for buyers and sellers in Toronto? Number one, buyer confidence is likely to rise when monthly payments go down, even just a little. People feel more comfortable jumping into the market. Number two, borrowing power improves. A quarter point cut boosts affordability by about 3 to 4%, and which doesn't really sound like much, but on $1 million property, that's tens of thousands in extra purchasing power. And number three, sellers may benefit from a busier fall market. If you are listing in the next couple of months, you could see more showings, quicker offers, and better pricing than we saw over the summer or even in the past year, really, when buyers were more cautious. And of course, the rate cut doesn't erase challenges. Affordability is still very tight, and inventory in parts of the GTA is climbing, which means buyers have more options. And just overall, this is a small tailwind pushing the market forward. Now, here is where things get really interesting. The return to office wave. Over the past year, more major companies, banks, tech firms, multinational corporations have enforced return to office policies, anywhere from 3 to 4 or even full week. And just recently, Ontario government ordered its own public servants to go back to the office by early 2026. And what does that mean for housing? It means demand is shifting back toward downtown Toronto and commuter-friendly neighborhoods. Condos near the core are becoming more attractive again, especially for younger buyers who need to be close to work. Transit accessible places along TTC, subway, GO lines, and hopefully soon completed LRT across town line are drawing more interest. Meanwhile, the pandemic trend of moving far outside the city for space, that's losing a bit of steam, especially for workers who can't stay remote anymore. Combine that with cheaper borrowing costs, and you have got a recipe for more competition downtown and a potential rebound in condo prices. So to wrap this up, Bank of Canada's quarter interest rate cut might only save you $100 to $120 per month on your own mortgage. Depends, of course, on the amount of your mortgage, but it sends a psychological signal that the rate hike era is ending. Buyers get a little bit more breathing room, sellers could see stronger demand in the fall, and investors should keep an eye on downtown rental markets. Layer on the return to office wave, and suddenly Toronto's urban housing story looks a lot more active heading into the 2026. If you're thinking about buying, selling, or just want to see how these numbers will affect your own situation, drop a comment below or reach out. I would love to walk you through your specific numbers. And if you found this helpful, don't forget to hit and follow and share with a friend who is watching the market right now.